Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, we're back behind the mic, fired up. The stock markets are absolutely tanking, yet we're still here making money, looking for that next opportunity. So look, let's go ahead and get to this because I'm going to show you today how you could use a great stock, a stock for which most people would not use because the very first thing they'll say is the premiums are not big enough. Now I'm going to show you how you can triple your premiums today using a great S&P type company, a company that has a 5% dividend, trades in the perfect range. And to be honest with you, it's about the safest trade you can have. Yeah, I said those words, and I'll tell you what, it's cringeworthy in today's stock market. There's no safe trades. There's always risk, but I'm going to show you a stock today that you can use to generate 3 times the profit, taking those little baby premiums that many times discourage traders from using that stock because they want those fat, juicy premiums. Well, I'm going to show you how to triple it today. So look, before we get to all that, because I'm going to show you my Nucor trade, for which was a poor man's cover call trade, where the stock rocketed past my strike price. I was able to close that trade out early. Everybody's asking me, look, how do you manage that trade? I'm going to show you how I ended up closing that trade. I think you're going to learn something today if you have a question about the poor man's cover call and closing out a trade for which the stock is rocketed past a strike price. So here we go. If you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like the video, do me a favor. Bang the like button. You know, it really lets me know you like what I'm doing. Right now, nobody's watching these kind of videos on YouTube. They've done exactly what I always tell you not to do. You're losing money. You coil up in a fetal position. You turn off the TV. You don't want to look. You throw your IRA statements in the trash. Look, these are opportunities. These are opportunities that you can't pass up. Right now, as the stock market is absolutely tanking, I'm looking to do another cash secure put on the TQs. Remember I did that video and I did the trade where the TQs is trading at the bottom of its range. The NASDAQ is down some 18% from its all-time highs. We're looking at this as an opportunity. I mean, when do you get these sort of opportunities? Now, I know a lot of people are saying, look, how do you feel about inflation and war and all this stuff? Okay. We have been there, done that. You know my belief. The belief is this. Since 2007, the Federal Reserve has backstopped all of this, and Wall Street has bought into that, right? You cannot generate income using bonds anymore. So you have to be in the stock market. So by them artificially keeping interest rates low, that means all of that money has to come into the stock market and buy stocks. They have to buy the Microsofts, the Apples. They have to buy all the stocks that pay the 3 and 4% to generate income. These are moments where we need to take advantage of them because what they do is sell them off to buy them back. It is a cycle that you have to have a mindset. And if you have the mindset, you'll make money. And that cash secure put trade, yeah, cash secure put at the money on the TQs when it was trading at 52, paid me some $16. That's 30% for a 12-month trade. Yeah, that's what I did. I parked enough money to buy somebody's shares, 300 of those shares, till January 2023 at the low. They paid me $16 a share. That's 30% on my money that's sitting there. See, that's what we think about here. That's what we do here. Okay? If you're watching videos where people are talking to you about the crash and getting you all fearful and clickbait, look, you want to watch my videos because at the end of the day, I'm a real trader. I got real money in the game. I need to generate income, so we don't listen to any of that noise. We're looking to generate income, and that's what I do here. So let's go ahead and get to this because I know you want to hear about that trade for which we can make 3 times the covered call profits. Now, when Nucor was trading at 93, let me show you Nucor's chart. Now, when Nucor was trading around $93, I decided to see if there was a poor man's covered call opportunity there. Now, I had never used Nucor, and Nucor hits my radar because I was checking the internet, and sure enough, the covered call advisor had done a trade on Nucor. So I took it upon myself to do some research, and sure enough, Nucor is one of those stocks that trades in a great range. Absolutely love it. And it's an oil play. And right now, oil being above $91 a share, it is moving higher. With the opportunity that Nucor fell off with the market, we're going to go ahead and look at a poor man's covered call. Now, if you remember, I used my poor man's covered call initial trade setup, which, by the way, go to my website, cptdashboard.com. I want you to click free spreadsheets and download your poor man's covered call spreadsheet. You need that tracker to know when you're profitable. Inside that tracker is the initial trade setup. You're thinking about a poor man's covered call on a stock you like. Well, you have to plug in the numbers to be profitable, or to know when you're profitable, and that's what I did with Nucor. At $93, I sent the members an email talking about that, and I was going to do it, and that's what I did. At 93, I went ahead and bought the deep, I think it was a 95 delta leap on Nucor, beginning the poor man's covered call. And when I structured my very first trade, I think I used the 97 strike. Well, as you can see, Nucor rockets off the chart, and all of a sudden now I have to manage this trade. Now, a lot of people ask the question, how is the trade unraveled if you don't own the shares? Now, there's two ways to do this. I'm going to be brief here because we have to get to that trade that I want to talk to you about, how you can triple your covered call profits. Here's the deal. Two ways. If a stock rockets higher, remember, you own the leap, so you have protection, meaning you can buy somebody's shares at your leap's price. And I actually think offhand, I may have bought the 45 leap. So that means I could buy somebody's shares at 45. The initial trade setup tab will show you the time value. You absolutely need to use that. You have to if you're going to do the poor man's covered call. So download that. It's free. I don't spam you. With that said, two ways to unravel this trade. One, you can do nothing. And if your broker will unravel the trade for you, what they will do is provide the shares to the call buyer. They then will execute your leap, essentially taking care of everything for you, and you get the difference. Now, my broker won't do that, because they said to me, look, you may want to keep that leaps option. So we're going to buy the shares on the open market, and we're going to give those to the call buyer. We're going to slap you with the debt, and come Monday morning, you got to pay off that debt. Now, whether I have the cash or I actually execute on that leaps option to generate the cash to pay off my debt is going to be up to me. But the point is, if you have set up your trade and it is profitable from the beginning, okay, you don't have to sweat that you're losing money. And that's the key here. A lot of people will buy that 80 leap or the 10% in the money leap, which I, for years, talked about buying the 10% in the money leap, because I was on YouTube watching all those videos where that's what they did. Well, we want to buy that 95 delta leap or above because we need to minimize the time value. The time value is the cost of the trade. And if you cannot make back that time value cost of the trade within the first or second trade, right? The near term 30-day covered call you're going to do, then that trade should not be done. Absolutely not. If you have to do 3 covered call trades to make back your time value, i.e. becoming profitable, you need to pump the brakes, step back. Use the poor man's covered call initial trade setup tab. You have to. I do it every single time. Now with Nucor, I went ahead, I bought back my option at a loss. I got X amount, the 30-day covered call I sold. It went above my strike price, which means that 30-day covered call is very pricey. Went ahead and bought that back for a loss, right? Now I own this leaps. And because it's a 95 delta leap, the leap has moved 95% of the stock move. And Nucor actually went to 113. So when I did the math, I was able to sell the leaps option, and the difference is on the table. Ended up pocketing max profit. Loved that trade. I actually wish I would have done more than one contract. I really needed to feel confident in my research. Now I'm going to show you another trade for which I'm going to do. I presented it to the members, and I told them, if you do this trade, I will follow this trade with you. We will do it together, and I'll help you navigate poor man's covered call exit strategies if we need to do it. Let's go to that 3x profitable trade right now. Now, if you want to be a part of anything you see right now, go to my website, cptdashboard.com, click Upgraded Dashboard. I give you 1 free month. Absolutely would love to welcome you aboard. Now, what we're talking about is writing a covered call using one of the biggest utility stocks on the planet. They have a 5% dividend, and this is one of those stocks that Wall Street will use all the time to generate income. And the chart that I'm going to show you here in a second reveals that. They buy it up, they sell it off, they collect that fat dividend. Gives us an opportunity to trade a range, and what we're going to do is we're going to use the poor man's covered call with Southern Company, but instead of generating a tiny little bit, less than $100 premium, we're going to generate 3 times that. And in this example, instead of making $100, we're going to make $300. Okay? I'm going to show you exactly how to do that. Now, my members get this. Seeing the world through my eyes. I've done thousands of trades over the past 5 years, and when you become a member, I want to share my talent. I send them emails twice a day, and to be honest with you, that's just emails where I share my thoughts and trade ideas. So this is my passion, and I want every member to succeed. It's all about having success. Why? Because I know if you have your first sliver of success, you'll do it again. And when you do it again, you will generate income. You will take pride in becoming a cash flow printing machine. Right? It'll start to flow like water, and you will be able to take control of your financial future. So with that said, we talked about Southern. Now, using the words damn near safest trade, I'll tell you what, that is cringeworthy. But with Southern Company, I feel so comfortable with it, I'm going to do the trade. And I offered this to the members. We got to do the poor man's covered call. So I talked about how we are going to buy a specific leap, and then we're going to write a 30-day covered call. But with that said, we're doing this in a company's non-event period. No earnings reports, no ex-dividend dates, and because Southern is a utility company, there's no same store sales. Okay? Outside of a major black swan event, you have a great 2-month cycle you can use with Southern Company. So, when Southern Company trades at the top of its range, I, owning 1,000 shares, will typically write a out-of-the-money covered call. With 100% expectations, the stock's going to peel back. I'm going to be able to keep that premium. Now, that premium usually equals a quarterly dividend given by Southern. I call it doubling my dividends using covered calls. Absolutely love that strategy. Keeps me in the game with Southern. Throughout the year, I know how Southern trades because I'm looking to pick up a little dividend crumb here and there. And I did it last month. Now, time to do the 3X trade. One thing I absolutely will do when I'm dialing up a poor man's covered call is go to the initial trade setup. And when I do that and I plug in my numbers, that time value is the most important part. Let's go ahead and look at the initial trade setup I sent to the members. We'll see how this trade sets up. Now, the one thing I want you to think about here with this trade is this. Southern is trading at $64.68. So to buy 100 shares of Southern, you need $6,468. That's to buy 100 shares. Now, typically you can write an at-the-money covered call, meaning you're giving somebody the right, but not the obligation, to take your shares from you at 65. Give them 30 days to make that decision. They'll probably pay you $1. That's going to be $100 in premium, and the stock's going to move an additional 32 cents. So for this 30 days on a $64 stock, you're going to pick up about $1.32. For a stock like Southern, that is a good trade. Now, as you can see with the poor man's covered call initial trade setup here, if we buy the 45 strike, that's deep in the money, right? We go out to January 2023, we find the deep in the money 45 call option. Let's understand this for a second. Southern's trading at $64.68. If we go out and buy the January 2023 45 leaps option, okay, every single strike price has a delta. And what that means is, as the stock price moves $1 up or down, that option will move by its delta. So in this case, the 45 strike has a 99 delta, which means stock moves $1, the option moves 99 cents. Now look at what the leaps option price is. I would pay $19.75 for the right, but not the obligation to take somebody's shares at 45. Okay, so when you do that math, you would pay $45 for somebody's shares. You paid $19.75 for that, right? Look at the time value portion of that option. It is literally 0.11% or 7 cents. 7 cents. So I buy the right, but not the obligation to take somebody's shares at 45, and the cost to do that is 7 cents. Hey, look, had I gone out and bought the shares up front at $6,468, that's a 1-for-1, right? It's the stock. But because I buy the leap, I spend a fraction of the money, which, as you can see, to take control of 100 shares, it's going to cost me $1,975. Now I own the paper to buy somebody's shares at 45 and only paid $19.75 for that. Now, the time value or the cost of having this right is 7 cents. Now let's do the math. Look at the very first trade. I picked the 65 strike and I would make $1.04. So doing the simple math there, the stock would move from 64.68 to 65. My option would move 99% of that move. So I would collect that because the option is going to be valued at that. I collect $1.04 in premium. Now, the time value for my leap was 7 cents. So let's minus that out, and there's your profit on this first trade. Okay? Doesn't seem like much, right? But remember, you were going to buy 100 shares for $64.68. So you would have to lay out $6,468. Let's go ahead and look at the numbers if we invested around $6,400 in this strategy and what kind of money we would make. Okay, I'm inside of my own personal poor man's cover call tracker. Love to set up trades. Looks a little different than the one you'll download, but that's all right. You're going to get everything that you see here, minus a couple, but that's all right. I'm going to add those to the Poor Man's Cover Call Tracker, and we're going to have a 2002 updated version. So I want you to make sure you go to ctpdashboard.com, click free spreadsheets. I want you to download the total income tracker so you can track every single one of your trades and the Poor Man's Cover Call Tracker. Now, here's the trade setup. One contract gives you the ability to buy somebody's shares at 45. You paid $19.75 for that, right? The cost of that trade is 7 cents. Well, you're going to do 3 contracts here. Now, I want you to stay focused here. You were going to spend $6,468 on this trade before you heard my plan. Okay, you were going to buy 100 shares, you're going to write that 30-day cover call, you were going to collect $1. Watch this. When we plug in the tracker, 3 contracts, we get to see what we would spend for this trade and how much money we would make in this trade. Now what you can see is this. We still pay the 7 cents. Nothing has changed there. But look at how much money we will invest for this trade. We will still invest less than the $6,468 we would need to buy 100 shares. But now we're doing on 3 contracts. And now we're making 3 times the money. Look at the money we're making with the March 18th strike, right? Right now as we sit today, if you sell that 65 March 18th strike, remember there's no company events, no ex-dividends, we can make up to 3 times the money using less capital than we would had we wanted to buy 100 shares. Look, this is why I tell you, the Poor Man's Covered Call is an opportunity to triple your income. Now, I don't want you to do this on stocks that have high volatility, right? The reason you don't do it on stocks with high volatility is what? Take a guess. Their options are fat and juicy. They have tons of time value in them. So what's going to happen is your very first trade is not profitable. Your second trade is not profitable. It's going to take you 3 trades before you even break even. Use the Poor Man's Covered Call on stocks like this. I want you to buy the 95 or better Delta Leap so the stock and your Leaps option almost moves 1 for 1. You can almost pay half the price to get involved. In this case, it's a third. I could actually buy 3 contracts and make 3 times the money, and I'm not even using the same capital. I'm actually using less. Let's go to the chart. I want to show you that trading range and what I think is going to happen. Now look, if you liked any of that, 1 free month, go get it. What are you waiting for? Now's the time. Now's when I'm sending out all those great communications, showing the world through my eyes. We're talking about 30% cash secure put trades. Unbelievable. I think I'm going to do that on Monday. Love that trade. Parking $15,000 for 12 months to make $4,800. I divvy that up monthly. That's $400 in cash flow. Think about that for parking money. Look, man, you have to learn how to sell premium. gives us the advantage other traders don't have. Here's Southern. As you can see, every time Southern moves higher, when I own the shares, I would write a covered call right here. Collect that dividend, we move on, and the stock peels off. Well, now with the poor man's covered call, we're going to do it in the inverse. We're going to do it on the opposite. See, I would be sitting here on my hands during this time, hoping it gets to here so I can do the covered call. Well, now when it gets here, I'm going to do the poor man's covered call. So I'm going to be generating cash flow here, but now I am going to be generating cash flow at the bottom of its range because we want to do poor man's covered calls when the stock is near the bottom of its range so we have more chance of the stock moving sideways to higher. And look at the range. We talk about the range here all the time. And look what's happening with Southern. It's finding itself back in its range. It's going to trade sideways. But you know what? I have 100% faith that this thing is going to go sideways. It's going to find itself higher. And we're going to be able to use the poor man's covered call to 3x our profits now. And when it gets higher, I own 1,000 shares. I'm going to write that top end, deep out of the money covered call, collect that premium on the top side. We're going to do this all year long. This becomes your cash printing machine. But you can only be a part of that with me if you go to the website and you get your one free month. CPTdashboard.com, click Upgraded Dashboard. Would love to welcome you aboard. Now look, in my next video, I am going to show you a cash secure put for which we can do to pocket fat premiums and never be assigned the shares. At least that's what I'm thinking, and I'm going to show you a stock I'm watching and I'm going to do it on. I want you to come back next video, so subscribe to the channel and bang that like button. Hey look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.